Hi, have you ever wondered why your structure is not holding, or maybe you don't know what to do when structure contradicts between different time frames? And in this video, I will show you a reliable, simple, and completely rule-based way to read market structure, which is a future basis for defining clear context. So, what is market structure in its simplest form? So At the beginning, imagine that the markets had only one time frame and only one direction. So it was going only up or it was going only down in one continuous impulse. Maybe we have some candles here, but it's just moving like this. So we understand that there is no market structure here. It's just one move. And so but then the reality of market is that it will not move like this. So when markets create something like this, we need to say, are these two obvious impulses different impulses or they are a part of one structural concept, structural thing. So this one is pretty, we can argue if this is one move or not. But for instance, if the market creates something like this, we can definitely say that whatever was here, it interrupted impulses between each other. And in the system that I used to trade for probably 2 years already, market structure divides impulses into different ones using a pullback rule. So a pullback rule is simply when you have concentrate on this part of price action. So when you have one impulse, and do not think about these lines, I will tell you in a second what they are. When you have this impulse, and then the market starts to go eventually in counter direction to its impulse. And we say in the moment when the market creates a candle close above the previous candle, like in this situation. So we have a candle, this one, and this one closed above this candle range, this candle's range with its body. So this is a pullback for us. So for example, if after this candle market continues to the downside, this impulse will be the next impulse, and this rule, it helps to divide impulses. um, Another illustration of this rule and more detailed outlook for this rule you can find in Trading for Beginners course in the Yellow's Trading channel. I really go in depth here about this rule, but take a look quickly. So we have a move, and then this candle does not close with its body below this one, but this one does. And so this is a start of a pullback, and anything that will break this high will be a new impulse. So this one more example, this one more example, and this an example of a more complex pullback. So we have a down move here, divided by these candles that didn't close with their bodies below above the previous one. So we have one move here. The pullback starts only here. Okay, so uh, to make our lives easier, we have this. So Mantifex created this free indicator, which basically shows you when the pullback started, and what it shows you market structure based on the pullback rule, and it's very convenient. So you don't need it's exactly the same as you would read the market. So for instance, it f is exactly the same if you would read the market with your eyes. So as you can see, you have this impulse, and the pullback started at this point with this candle, and then everything else is just inside structure, which of course has its meaning in the context and overall, but now we will just keep it simple. This inside structure, the real structure goes from this high to this low. Now why we have a low here? Because this candle, this one, broke the low with its body. So now this is a new low here in the lowest part. And where is the high? The high is the last pullback rule before the break. here it is, here this is the high, because as you can see we have a candle that closed above the previous one. So basically all impulses, they are framed with this pullback rule from one side and from the other side. And in this way you can easily read the market. And in the essence what it does is when you have a break, you now can expect after some time for pullback. Of course the system goes into more detailed and detail here, and on this channel I have a basic course, advanced course, you can go in depth here. But the simplest explanation is that when you have a break, now you can expect that the market wants to continue in the direction overall. Okay, it's a really simplistic explanation, but you can expect that sometime in the future we will have one more break. And then after some consecutive breaks of structure, your expectation will shift more and more into pullback. I don't say that you need or want to trade it, but uh, of course the nature of the market is that after several consecutive shifts, especially after 7 or 10, it tends to go and clear the structure below before continuing higher. So this one shift of the structure does not mean the market is bearish, it's reaccumulation. Yeah, so this is market structure, and of course how you can use it in this simplest form I just told you. And then later you can find some bonus tips that I prepared for you today. And first one is confluence. So what confluence means is that so let's say we have this bullish break here. So we have this latest bullish impulse on Euro USD on the daily. And now we can ask ourselves, but what the weekly is doing? The weekly in its latest impulse is doing bearish price action. What is the monthly? What the monthly is doing? Monthly is also bearish, as you can see. So you can quickly find this structure. And what 4 hour is doing? 4 hour is doing bearish shifts. So we have bullish daily, and we have bearish weekly, 4 hours, and monthly, for example. Now, based on this confluence, you see the contradiction between daily and these time frames. What you can do in this situation, you can wait for the daily to shift to the downside and become in be in confluence with other time frames. So this is confluence. What I do in my trading, I usually want to have confluence between uh, three relatively distant time frames. For example, daily is doing this, then creates a pullback. So this is a bullish range. Now 4 hours in this period is bearish. So I want 4 hours to shift to the bullish side here and maybe create more pullback. So now like 15 minutes is bearish here, and I want 15 minutes to shift to the bullish side. And now in this moment, I have bullish daily, bullish 4 hours, and bullish 15 minutes, something like this. So this is confluence. The other thing that you can use with the structure is overextension. There are two types, in my eyes, of overextension: structural and um, inside overextension. So structural overextension is that when you have 5 or more consecutive shifts of structure, and so you have here 1, 2, 3, 4, 5. After 5 or more, you can expect either more chop here or at least one reset to the downside. Okay, so you basically in the markets, it's really a rare situation on any time frame that the market will have like 12, 15 consecutive shifts of structure. And so how you can use it is when you have like 5 shifts of structure, and even when you have a setup, you decide to wait because you understand that you had possibilities to enter in these ranges in earlier ranges, and now the move played itself out. Now it's overextended. The other type of overextension is inside overextension. Is when the market creates like a really big move, individual move. So while it may look really exciting for the beginner, the nature of these moves is that they will not continue now because they have no power to continue. Most likely, So this could be a news move, most likely it will just chop inside the range. And then these boundaries, they will not have so much influence anymore. They will just be wicked all over. So an example of such kind of overextension, we can see, I don't know, maybe even here. So this could be an example, but it kind of worked. But you have this big move, actually two moves here, and then like maybe someone expected continuations from here because it's so bullish and impulsive. But the nature is that for many hours now, we chopped inside the range. Maybe I will find a better move here. Yeah, maybe this one. So you have this big move, and now at this point it's internally overextended. The best setups happen when you have like wave-like calm structure, something like this. So you have systematic, continuous move. One more thing that you would like to know about structure is structure quality. So again, I spent a little bit more time than I planned, so just refer to setup quality video in beginner's course, and you will have more on quality and clarity of the impulses and of structural ranges in the market, because of course not every break, not every structural move is clear. So for example, this is a clear impulse. Compare this impulse, for instance, even to this one. So this one consists of one-sided candles, almost full body, almost no wicks, but this impulse is breaking with down candles. It's wicky and it's not that clear. Or compare like this kind of a move which did not work, by the way. Or you can have this move which worked eventually. So we have a break, we have a new high. Compare these clear moves to like this move, you know, to the other side, or these kind of moves. So you see, you can have different levels of clarity and choppiness in the market, and you want to understand what is clear market, what is chop market, because you don't need to predict choppiness. You want to trade clear markets, good setups. And one more tip is that a big mistake that many traders do if they trade somewhat similar approaches, they try to force the change in the bias and force the change in direction. In what way? For example, the market is moving up and now we have a shift to the downside. So this is not a change of character. This is not like, yes, technically it's a bearish break, but it's only one break. The market is not moving in this nature, and this one break is not the reason to try to short the market. Why? Because in this situation, all the previous breaks, they are like puzzles into one picture, the picture of reaccumulation. So this one shift, and even if it will have one more shift, this is reaccumulation. This is bullish pattern. In this form, it is unconfirmed, and it can say two things to us. Either it wants to have more chop here, in which case it will later be transformed into accumulation, into continuations, or it will just confirm itself here and then go to the upside. So this is the expectation of this kind of market. Of course, it can transform into distribution and so on, but that's why you need different that's why you need the skill set in the system to understand when the market is shifting. But the key moment here is that when you have like shift to the downside, even too, this is not a bearish market. So this is not a bearish market. A bearish market would be if we undergo some kind of distribution. So this bigger chop distribution, the market will be then cleared to the bearish side, maybe perform this, maybe go for for redistribution here. So we have down, down, up, so this redistribution and confirm. So this is kind of bearish market, especially if confirmed on higher time frames. But yeah, one shift does not mean anything. So you have different models in the market, like accumulation, it's back and forth, plus some bullishness. You have reaccumulation is when you have established trend, and then you have this one or two or even three shifts to the downside. This is not confirmed, and with this break, it's confirmed reaccumulation. And then you have mirror setups, like distribution is back and forth, some kind of flat or consolidation with some bearishness, this distribution, and redistribution is like this and like this, not confirmed and confirmed. And then you have confluence between these ranges, and you have confluences between all the models, and then you can decide the context of the market. So this is how we finish this simple structure for beginners. But again, you can explore more in the Trading for Beginners course. You can explore more in the advanced trading course, and you can have a lot of examples of live trades here in my journey live trade recap. So I really invite you, if you are interested in this method. And the indicator is Mantifact structure, by the way. Okay, good luck to you. I hope this was informational. Send me your questions. And by the way, I have this free call, free 30-minute call for anyone interested. If you just want to talk, I will not sell you anything. If you want just to talk, to share your struggles, I will be happy to just listen and support you, maybe give some advices. Okay, bye.